Hello traders and welcome to the market opening preview, June 15th, 2015. Traders, great to be with you, coming to you live from Pattaya, Thailand, bright blue sunny skies and white sandy beaches after a weekend of rain. Traders, this is brought to you through FXCL Excellence in Trading. If you would, come visit our website at fxclearing.com for your trading solutions. Traders, we've got some currency pairs to look at, some charts to look at, some news to talk about. Not much news, but we're going to talk about it. And we got some commentary for you. So before we get started, if you would let me introduce myself to you. My name is William Gilda. I'm your moderator for the Market Opening Preview Series, which is brought to you every single trading day before the London Open. Traders, I started trading in the year of 2006, and in 2008, I retired from a wonderful 27-year career in the fire rescue department out of the great state of Florida. Traders, 9 days later, came to Thailand for a 3-month holiday to celebrate my 27-year career. Well, it's 2015 and I'm still here. Yes, I do trade Forex every single trading day. It doesn't necessarily mean I'm taking a trade, but I'm looking at markets, I'm listening to fundamentals, and I'm looking for opportunities with probabilities on my side to be successful in my trades. And traders, it is true, I do not win every trade. If anybody ever tells you that, please run the other way. All right, traders, that's enough about me. Let's head on over and let's get the legal stuff out of the way. This is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. That's the legal stuff. Let's head over to news and commentary and let's see what is going on. How did the markets close on Friday? Well, the US 30 closed negative 0.78%. The S&P 500 closed negative 0.70%. The Nasdaq closed in the red at negative 0.62%, with the Russell 2000 closing negative 0.24%. Let's head on over to the Eurozone and see how they closed. The DAX closed negative 1.20%. The FTSE 100 closed negative 0.90%. The CAC 40 closed negative 1.41%. And the Eurostoxx 50 closed negative 1.38%. Traders, let's take a look at some countries that are currently trading in Asia. The Nikkei 225 is currently in the red at negative 0.21%. The S&P ASX 200 out of Australia is negative 0.54%, with the Shanghai in the green just barely at 0.05%. The Hang Seng's in the red at negative 0.94%, and the Kospi is in the red at negative 0.21%. So that gives you an idea what's going on and what happened on the New York close and what is going on currently. All right, so what do we have for data today? Well, we have 2 high impact data events, and they don't come until the U.S. session. We have manufacturing sales out of Canada, but the big one is that 30 minutes before the U.S. Open, we have ECB President Draghi is speaking. Well, what's going to be the issue with that? Let's move right into the commentary on that note. On that note is that probably about London lunch, or maybe even before, the markets are going to clam up. They're going to slow down really bad, and it's a Monday. Draghi speaks, the markets move. So we might have a great New York session because Draghi's speaking, and he will move the market. There is no doubt about that. However, the rest of the day is medium and low impact data. We have nothing in the Asia session while I'm recording this. And that's about it for today, folks. So we have some Canadian news, and then we have ECB President Draghi speaking. And he, as usual, will say something to move the charts one way or another. Traders, we are going to look at some 60-minute Forex charts, meaning every single candle on the chart is 1 hour. And we're going to look at some price action and some trade plans. Well, it's pretty interesting. I think we have some really good trade plans today. We'll see how it works. Let's get started, as usual, with the euro dollar. This is the euro dollar, and as you can see, we had an up day on Friday and then pulled back down, and we starting today with a gap. So I'd like to see this pull back and get to that 618, and we can sell this at 1.1259. Well, this does two things. One is we have enough pips where we're going to get back to this 200 exponential moving average because currently we're above it. And so we want this to pull back, and then when we get to it, hopefully it'll just pop through it and we can take it down. Or you can be conservative and just wait for the second entry that I placed on the chart, and that is below the 200 exponential moving average, and that is at 1.1192. So, there's pros and cons of both. But we don't know how London's going to open today. So, if London opens and just pushes through this 200, we're just going to sell it, right? We don't want to. Not looking to buy the euro dollar, so we just want to sell this. However, I have to say, if you take a look left of the chart at current price, this is a pretty ugly chart. We got a lot of Forex junk in our way. We got some support and resistance levels. The last candle was a decision candle, which was red. Then we have two indecision candles, and we started off Asia with a up candle. So we don't know what's going on with this 200 exponential moving average. And being there's no data in Asia, it's possible we're going to stay sideways till the London Open. Our ultimate goal is to take profit at 1.1091, which would be that's a 100 pip trade if it works. So you have plenty of room to work. You got plenty of room to use your trade management skills and take some nice profits. All right, let's take a look at the pound, the good old pound. Only thing we want to do with the pound is we want to buy this, right? We want to buy the pound. For those of you who took a look at my Friday wrap-up video that was put up over the weekend after the New York close, you would see I did a comparison with all the pound pairs, and we are just bullish. That's all I could say. We are just bullish. So we're in a really great spot right at the moment at the 618 at this 55-51 area, and we just want to take this up to 56.91. So this is really a great trade here. Even if we're at the spot. We're just looking for the bullish candlestick formation. Listen, if it comes down to this 50% of the 382, who cares? We'll just buy it from there. But we just want to buy this. But we know that the pound dollar does not like to give us pullbacks, so I don't even think that's an issue. So we want to take profit at the 161 fib extension again at 56.91. Folks, let's take a look at the Aussie dollar. The Aussie dollar, if you look left of the chart, it is a ugly, ugly, ugly chart. We've got a lot of Forex junk here. And we have the 200 exponential moving average currently interfering with price. That's been rejected from that. All we want to do with this pair is sell the Aussie dollar, right? The dollar is stronger than the Aussie, so we want to sell this, especially in Asia today with no data. We want to sell this. We want to take this down. However, I'm not willing to just jump into this trade right out the gate at this 200 exponential moving average at 77.19. I want this to break this trend line that I placed on this chart. It's a three-touch trend line, and I want to sell this at 0.7698, which will get us clear of all that junk, and we can have a nice wide open space down to 0.7642. You can see I put a horizontal support line down there where that check is, and that's where we want to take profit at. So you have plenty of room to work this. You might get some noise at 76.55. If you take left of the chart, you can see there's some support over there. So you might get some issues there, so just get out. You've made your pips and just move on, right? No reason to stay in a problem. But I think if we can break this trend line, I think we got a great trade ahead of us. Let's take a look at the Euro Aussie. The Euro Aussie continues to be bearish. And, we're above the 200 exponential moving average. And I'd like to see this pop up to the 618 and then just take this down and don't worry about this 200 exponential moving average. The other issue is, what if we just bounce off of this 200 exponential moving average? Well, in my view, then there's no trade. Okay, I just want to sell this. This is bearish. I want to sell it. So if this turns around and gives us a blue candle at the London Open, or two blue candles by London Open, or whatever it is, we just want to sell this. So if the trade plan doesn't work, I'm not trading it. I'm not going to reverse my trade plan. Look at this chart. This chart is bearish on the 1 hour. So, if you take a look at the daily, it's the same. It's bearish. We want to sell this, and we want to take this to the downside. So it's going to be interesting if this 200 holds up, because if you look left of the chart, it has held price significantly, both as support and resistance. So again, I just want to sell this. I do not want to buy this. We might have to wait till it breaks the 200 and enter the 38.2, which is fine. That's not a problem. We'll just do that, and that's it. 45.09. So if that's what we have to wait for, then we'll wait for it. But remember, we just want to sell this. Okay. All right. Let's take a look at the euro yen. The euro yen, it's turned bearish on us, and this is going to be an interesting trade today. I want this to come up to this 61.8, and then of course we have the 200 exponential moving average right there as resistance, and then we can just sell this. Now, what if we don't get the pullback and this decides at this 38.2 at London Open, we're just going to head on down, and we're going to show you some bearish candles, and then take it down, because you have plenty of room. If you get in at 50 and you're going down all the way to 04, it's a 45 pip trade, so there's no reason not to take the trade. So you really have two entries, but I'd like to see this bump up a notch to the 61.8, and we can get in at 138.73 would be really nice. Or the 50% at 62, either one of them. I just like to see this give us another blue candle or two, and then give us a nice red bearish candlestick formation at the London Open. All right, and the last pair of the day is our New Zealand dollar. Bearish, bearish, bearish. Nothing I want to do other than sell this. Again, I'd like to see this pop up a notch and get us up to the 69.91 area. That's a 38.2 fib, and we can sell this down to 69.45. It's a nice 40 pip trade, and take this trade that way. The other thing is, you can, at the London Open, I wouldn't do it before the London Open, because we don't know how London's going to react to some of the results on what happened in New York. You can sell this from here, but just be aware that you're into a 30, a 28 pip trade till you hit support again, and just be aware of that. So if you're going to do that, remember you have to enter the trade and you have to sit at the chart. It's not time to go walk the dog or shopping. You're going to have to sit there and watch the chart. Alrighty. All right. That ends our 6 currency pair review. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, please come visit our site at fxclearing.com for your trading solutions. Traders, have a great day, and always remember to trade smart, not hard. Traders, we will catch you in the next Asia session for another recording of the Market Opening Preview. Take care, traders, and grab those pips. Bye-bye for now.